And testing 1, 2, 3, testing. Hi everyone, I want to thank you all for joining me this evening. It's great to have all you here. My name is James and I am the market strategist at uSMART Securities. My voice may sound a bit weird as I'm having flu and sore throat. So yeah, let's get started. Welcome to another installment of the Talk Stock with James series. Tonight our focus will be on one of the most important popular stocks, Nvidia. Our topic is Nvidia's valuation is absurd, but should you still own it? As indicated by the title, we believe that the recent surge in Nvidia stock price may be overdone. Nevertheless, the most or more crucial question is whether it is still worth investing, taking into account that the share price has gone up so much. I am conducting this Talk with James series every alternate Thursday, 7:30 p.m. The next one will be on 20th of July. Additionally, we'll be uploading this replay of this Nvidia webinar once it concludes. You can find the replay on the Talk with James YouTube channel. While you are listening to a replay, please also subscribe to our YouTube channel. And let me begin with some disclaimer first. This presentation is presented to you for education and sharing purposes only and does not constitute to any form of advice. Past performance is not indicative of future performance. You are responsible for your own investment. Today, let's talk about Nvidia. Nvidia is a leading technology company that is known for designing and manufacturing graphic processing units, GPUs. Nvidia GPUs are widely used in gaming, professional visualizations, AI computing, and data centers. Nvidia was founded by Jensen Huang in 1993, and he has remained the CEO since the company's inception. And here's some interesting facts about Jensen Huang. Prior to founding Nvidia in 1993, he served as a chip designer at an AMD, the largest competitor of Nvidia in the GPU market. Currently, Lisa Su is the CEO of AMD. What is even more interesting is that Jensen Huang is actually related to Lisa Su. Lisa Su's grandfather is Jensen Huang's uncle. Nvidia surprised many investors when it surpassed Intel as the largest US chip maker by market cap in 2020. Its market cap was $250 billion in 2020 and has now ballooned to $1 trillion. In comparison, Intel currently has a market cap of $140 billion. AMD is at $186 billion. ASML is at $295 billion, and TSMC is at $535 billion, which means Nvidia current market cap is now approximately 7 times greater than Intel, 5.5 times greater than AMD, 3.5 times greater than ASML, and 2 times greater than TSMC, which begs the question, does Nvidia truly justify its current high valuations? Nvidia is currently trading at $423, a significant increase from its October low last year. This marks a rise of $311 or a remarkable 277% increase. Personally, I consider Nvidia as consistently being one of the most crowded trades in the US market. Oftentimes, when observing the share price, it gives the impression of being overvalued, overhyped, overrated, and overowned. If you look at valuations, you will probably feel the same way as well. Nvidia PE ratio is trading at a striking 205 times, whereas the PE ratio for S&P tech sector is only 34 times. Tesla is 82 times. And Tesla, in comparison, often also criticized as overhyped or overrated, has only a PE ratio of 82 times. Price to sales ratio is telling you the same story as well. Nvidia is at a PS ratio of 40 times. S&P 500 tech sector is 7 times. Tesla is 10 times. Despite Nvidia's valuations looks expensive right now, analysts' 12 months target price according to Bloomberg consensus is $460, an upside potential of 8.9% compared to yesterday closing price of $423. So what exactly is Nvidia? Nvidia is a fabless company that designs GPUs. It is currently the largest GPU company, holding a market share of 84% in terms of shipments in the first quarter this year. The second place is AMD with a market share of 12%, and Intel holds the third place with a 4% market share. It is important to note that these market shares specifically pertain to the PC market shipments. The exact market share of Nvidia's GPU chips for AI computing, which got all the investors excited about, is unknown. But it's safe to assume that Nvidia is also the market leader in AI computing chips. Having said that, AI is currently experiencing remarkable growth, with companies recognizing its potential and actively mentioning it in their earnings calls. Many US companies are committing significant resources to invest in AI computing due to the success of ChatGPT. And Nvidia's GPUs is almost a perfect fit for training large AI models. ChatGPT is powered by Nvidia A100 and H100 GPU, so there is a surge in demand for Nvidia GPUs as every company strives to copy the AI success and strive to enhance their AI capabilities. Based on a lot of AI research papers, the top 4 GPUs to train AI are V100 RTX 2080, RTX 3090, and A100. They are all Nvidia's GPU. According to McKinsey, AI could generate economic value between 11 trillion to 17 trillion, which is about 15 to 40% more to the global GDP. So the total addressable market for GPU is huge, partly due to AI development. It's estimated that GPU market size was valued at 33 billion in 2021 and is now projected to reach 477 billion by 2030, going at a CAGR of 33% from 2022 to 2030. I believe the market size for AI could be even greater, because to train an AI model needs GPUs, and inferencing may need more GPUs as users grow. Inferencing is the phase where the model is deployed and used to make real-time decisions or provide responses based on the input data. Let's take ChatGPT as an example. It took 10,000 Nvidia GPUs to train the ChatGPT model effectively. However, as the number of users grows, ChatGPT may require more than 30,000 Nvidia GPUs to handle the increased workload during inferencing. And we did not even got time to talk about other demand for GPUs as well. Demands such as metaverse, cloud computing, and IoT. And now let's look at some financial number. You could see that the revenue and operating income growth were great in the year of in the financial year of 2021 and 2022, but it came down a lot in 2023. For example, financial year 2023 revenue growth was just 0.2%, and it was negative 40% growth for operating income. And if we look closely at quarterly earnings, it is obvious that the revenue and operating income have experienced a consecutive double-digit loss for the past 3 quarters. So why Nvidia share price skyrocketed 190% this year? It is because investors think that the success of ChatGPT will make every company invest heavily in AI. And to the surprise of many, the revenue guidance for the next quarter is a 50% growth from 7 billion last quarter to 11 billion, exceeding expectations by a lot. The gross profit margin guidance in the next quarter is 68% as well. So basically, it would be a 4% improvement from last quarter, 64%, and 68% quarterly gross margin, profit margin, would be the highest in Nvidia history as well. Regardless of AI, we also see that gross margin, operating margin, and net income margin has also improved a lot for the last 3 quarters itself, indicating the worst that we witnessed in second quarter 2023 due to inventory corrections is probably over. So it's good that we also spend some time to look at revenue by end user as well. There are 5 segments. Firstly, data center. Data center revenue includes revenue from AI computing chips and software, cloud computing, all the high performance computing. It accounts for 55% of the total revenue. Gaming is the gaming revenue. It's a gaming GPU sales, but a lot of crypto miner also uses gaming GPU to mine cryptocurrency. This segment accounts for 33% of total revenue. Interestingly, Nvidia actually designed their own dedicated cryptocurrency mining chips, CMP, and they categorize the crypto mining chips as part of the OEM revenue. But this OEM revenue is quite negligible at 1.7% total revenue itself. Professional visualizations focuses on chip revenue for digital content creations. For example, studio entertainment companies buy Nvidia GPU to work on special effects for movies, but the revenue contribution is quite small at 5% itself. Lastly, automotive revenue includes auto AI solutions, which include AI cockpit and self-driving revenue. It only accounts for 3% of the total revenue, but it is one of the most promising growth in future. But at this stage, I don't think anyone should get overly excited about it due to low adoption of autonomous driving, and simply autonomous driving is not ready for prime time. If we look closely into the quarterly revenue growth, we could also see that data center revenue is one of the only two segments that have experienced year-on-year growth in the last 5 quarters itself. Suffice to say that data center revenue is driving the overall revenue. I am not concerned about data center revenue because of the evolution of AI will support this segment. However, I'm worried about gaming revenue. Gaming revenue has been shrinking significantly with 4 consecutive quarters of negative revenue growth. Nevertheless, let me highlight the positive aspect of Nvidia gaming GPUs. Nvidia is the clear market leader in PC GPUs, holding a market share of 76%. AMD occupies the second position with a 15% market share. Intel is 8.7%. Furthermore, if you look at the performance of gaming GPUs, you will notice that Nvidia GPU consistently receive high ranking. In fact, none of the AMD GPU are listed in the top 10 best user rated GPU, whereas all the top 10 positions are held by Nvidia GPUs. In terms of gaming, if you are an avid gamer, you probably will prefer Nvidia GPU. In general, if money is not a concern, most gamers will go for Nvidia 4090 series to future-proof any upcoming AAA titles. Here are some of the reasons why Nvidia GPUs are better than AMD's. Firstly, Nvidia ray tracing technology is miles ahead of AMD. If you do not know what ray tracing is, it's a technology that makes gaming visual look realistic and provides gamer an immersive experience akin to the real world. Nvidia GPU outshine AMD's and it delivers significantly better performance as high as 60% in AAA games. Secondly, Nvidia proprietary DLSS technology has been in the market much earlier than AMD. Nvidia released its DLSS software in February 2019 and has since produced 3 generations, each significantly improving the frame rate performance for gamers. In comparison, AMD only released its DLSS-like technology FSR in June 2021. This hence allowed Nvidia to grab market share earlier on due to the first mover advantage. As a result, this further strengthens Nvidia brand loyalty despite AMD's GPU being priced 30% to 40% cheaper than Nvidia equivalents. A majority of gamers will still prefer to use Nvidia GPUs. This is why there is up to 76% of Steam users choose Nvidia GPU. But I am not excited about gaming revenue because the PC games market share declined 2.6% in 2022, indicating a shrinking market. And the forecasted CAGR is just 2.9% from 2020 to 2025 for the global gaming revenue. And to make things worse, Ethereum transitioned from proof of work to proof of stake in September last year, resulting in less demand for GPU in cryptocurrency mining. So overall, I believe that gaming revenue will continue to decline, and sure, there may be a demand for Nvidia GPU if cryptocurrency like Bitcoin prices go back up to $60,000. I think cryptocurrency prices, after all, are still quite volatile, and therefore I don't think it's wise to assume good growth in the gaming segment itself. Let's talk about one of the biggest risks that may push Nvidia share price down lately, which is the export ban. One of the biggest risks to Nvidia is the ongoing tech war between the US and China. In September last year, Nvidia received a request from US officials to halt the export of two high-end AI computing chips, A100 and H100, to China. They are basically flagship GPU designed for AI computing, and following the news of export restrictions, Nvidia stock price dropped by 27% within 1 month. To address the situation, Nvidia developed downgraded versions of the chips known as the A800 and H800, which have lower performance compared to the flagship models, and these were allowed for export to China. However, recent news suggests that the US government is considering imposing further restrictions on AI chip exports to China. Nvidia CFO stated that while this restriction would not have an immediate financial impact, they could potentially hinder the future growth of the company. So the risk of further restrictions on exports poses a significant concern for investors in Nvidia. It's estimated that the potential ban could lead to a revenue loss of 5% to 10% in the data center segment. But if you look at China revenue contribution, China contributes approximately 21% of Nvidia's total revenue in 2023. When the US imposed restriction on China, Nvidia revenue growth in China declined 43% year over year in third quarter 2023 and 51% in the final quarter 2023 itself. So it is quite serious. But probably it would also give us an opportunity to accumulate at a lower price. Let's talk about the performance and risk ratios. I want to compare Nvidia, AMD, Intel, Tesla, some semiconductor ETF such as SOSX, SMH, and last but not least, Nasdaq 100. There are a few key takeaways here. Firstly, Nvidia has been listed since 1999. Since its IPO, it has yielded positive yearly returns in approximately 70% of the times. Apart from the period between 2010 and 2012, Nvidia generally does not provide consecutive negative yearly return. Secondly, Nvidia is highly volatile. The year-to-date return is 189%, and in some years, it provided triple-digit returns, such as in 2001, it provided 346% return, and in 2020, it actually provided 120% return and a 125% return in 2021, just to name a few. However, it's worth noting that the return for 2022 was negative 50%. Thirdly, there are not many large cap stocks that can provide such exciting and volatile returns like Nvidia. Another large cap stock with similar characteristics is one of my favorite stocks, Tesla. In terms of the 10-year analyzed performance, Nvidia stands at 62%, while Tesla is at 40%. However, Nvidia is currently near its all-time high, whereas Tesla is trading probably 30% discount from its all-time high, making Tesla more appealing to some growth investors. I think one key uncertainties for Nvidia is all the all the total addressable market given by the analysts seem a bit abstract. It's difficult to determine how many GPUs Nvidia will be able to sell in future. On the other hand, I have more confidence in estimating the number of Tesla cars that could be sold in the future. So if you are an aggressive investor, considering both Tesla and Nvidia together may be beneficial due to their similar volatility and performance. Nvidia's maximum drawdown is negative 66%, while Tesla is at 73%. The standard deviation is 45 for Nvidia, and it is 58 for Tesla. If you can only choose one growth stock for a super aggressive growth portfolio, my personal preference would be Tesla at the moment, especially considering it is still trading maybe 30% discount from its all-time high. But again, why not both? The evolution of AI is expected to benefit the entire semiconductor industry supply chain as well. So Nvidia will not be the only winner here. As a result, investing in semiconductor ETFs like SOSS and SMH can be a diversified and less risky alternative. This ETF has shown a 10-year annualized return of approximately 24 to 25%. Their maximum drawdown has been negative at around 46%, and their standard deviation is about 29. Investing in semiconductor ETF allowed you to gain exposure to the overall growth potential of semiconductor industry while spreading the risk across many other companies within the sectors as well. If you have a genuine interest in the semiconductor industry, one investment strategy is to invest in a semiconductor ETF like SMH. Additionally, you can invest in individual companies within the sector to potentially gain alpha or extra return. There are several prominent companies that I personally favor, including ASML, Nvidia, TSMC itself. These companies have shown strong performance and are considered leaders in the semiconductor industries. But when it comes to AI companies, Nvidia is probably the best AI stock. If you are considering investing in AI-related companies, aside from Nvidia, it's important to consider company that possesses extensive data for training purposes and a large user base for selling the AI products. Some notable companies are Apple, Microsoft, Google, and Tencent. And now let's talk about valuations. We use DCF model to derive a fair value of $279 for Nvidia share price. So if you compare it to yesterday closing price at $423, it represents a downside of 34%. Some assumption I made include a WACC of 13% for Nvidia and an exit multiple of 45 times, largely driven by the AI market demand. So if you ask me, probably the preferred entry price for Nvidia is $280, as this is where the fair value is. But since there is currently no alternative to Nvidia GPUs, and based on Nvidia's past share price performance, I believe it's still worth investing in. I think Nvidia has the potential to surprise all of us. One investment strategy you could consider is splitting your investment into 3 tranches. For example, if you intend to allocate 9% of your portfolio to Nvidia, you can invest the first tranche of 3% at the current price. Then you can invest the remaining 6% in the second and the third tranches when the price increases or decreases by 10% or 20%. Alternatively, instead of investing 9%, you could allocate just 1 to 3% in Nvidia. Take a lower weight in your portfolio as the share price is trading at such a high multiples now. If you hold a different perspective and wish to engage in short selling, you can indeed utilize the short selling functions available at our uSMART app. It allows you to take a short position on the Nvidia share itself. Another approach to short sell Nvidia is to invest in the AXS 1.25 times Nvidia Bear Daily ETF. This ETF aims to provide the inverse 1.25 times daily performance of Nvidia. The ticker code for this ETF is NVDS. So just remember that since this is an inverse ETF, when the share price of Nvidia goes down, this ETF share price will go up. And I shall end my presentation here. Please subscribe to our channel, and I will be uploading this webinar in the next few days. And now let's proceed to the Q&A sessions. You can type your question in the Q&A box, and I'll try to answer all of them. Okay, let's answer the first question first. Do we expect the price to go much higher, or do we expect a burst anytime soon? Is it possible that there is a burst? Yes, this is a good question. Okay, yes, I would say that yes, some analysts are actually saying that this is a baby AI bubble at the moment. So in any given time, it could be a burst as well. Just remember that last time when Nvidia went up to 330 in the year of 2021 or early 2022, it dropped by maybe 40 to 50%. So if there's a burst, probably this is some of the magnitude you could take note of. And will US impose export ban for Nvidia to export goods to China? I think it's a high possibility event. So if that happens, I think maybe bears will use this opportunity to short sell the market. But I also want to point you to the year of 1999, year 2000 as well, when people talk about IT bubble. So when the IT bubble happens, right, some of the IT company share price actually shoot up to maybe more than 100, 200, 300%. So it actually surpassed everyone's expectations. So there is also a possibility that Nvidia share price, which is trading at $423 now, could shoot up even higher before it corrected. So this is why I would say that one of the better investment strategy is you could either take a lesser weight in order not to miss out the whole AI race, or you can split your order into 3 tranches, just going at different timing. So in the event that the price shoot up, right, you won't miss the whole bull run itself. Okay, so next question is, what is the major risk that Nvidia faces? Okay, there are quite a number of risks that Nvidia faces. As I mentioned earlier, the ongoing tech war between the United States and China is a significant risk. The chip export ban to China is likely to resurface repeatedly, posing a persistent or permanent challenge for Nvidia. But you should still like Nvidia despite the risk, because China will still find a way to buy the Nvidia chip itself. I also think that since every big tech companies are inventing their own GPU-alike chips, they will rely less on Nvidia GPU in future. For example, Google has their own TPU chips for their own AI computing use. Lastly, I would also say that if AMD or another company invents a superior version of GPU, it could potentially threaten Nvidia business, but still it's quite hard to imagine that because Nvidia GPU to me is monopoly at the moment. So Nvidia has vast user data to train their own AI, their own GPU to come up with a better version of GPU. So they have and they also have the AI solution CUDA for company to train AI as well. Overall, while there is quite a number of risks, the share price of Nvidia will also continue to be quite volatile, but I will still think that Nvidia is in the right industry with the right products itself. Okay, Hong Kong stocks are down today. Do you think that it is a good opportunity? I would say that you are talking about buying. Yeah, I would say that there are a lot of investment opportunities in Hong Kong, but only for certain stocks. First of all, I would say that it's quite difficult to guess when Hong Kong can rebound. And if you remember, Hong Kong Hang Seng Index actually dipped below 15,000 in October 2022 and rebounded 5,000 points in the final 2 months of 2022. So I guess some investor like me are thinking that the rebound will happen. We just do not know when, probably in the final quarter. Secondly, I think the most attractive sector in Hong Kong is still the growth sectors, not the bank sectors, because as a Singapore investor, you know the 3 big local bank stocks are super good. So I hold a constructive views on Hong Kong tech stocks, especially on Meituan, Tencent, and Pinduoduo, but Pinduoduo is listed in US. Okay, why there are no comparison between Google, Microsoft, and Nvidia? Okay, good questions. The reason I did not discuss about Google and Microsoft is that I believe Nvidia is the most direct beneficiary of the AI evolutions, since AI requires GPU computing chips. However, it is difficult to predict that whether Brad AI or ChatGPT will emerge as the only winner at this stage. Additionally, ChatGPT is also expected to be added. ChatGPT is expected to be added to the existing suite of products or to enhance their current product offerings. So the exact revenue contributions of ChatGPT is still unknown. In a way, it's like saying that one should invest in the company that sells the tools, the shovel for gold mining, rather than the actual gold mining company itself. Okay, what is your take on TSMC? Yeah, TSMC is a good company. It's still like maybe 10 or 20% below its all-time high. I would say that TSMC has the best chip manufacturing technology. You can see that Intel and Samsung are also designing smaller chips as well, but I would say that those companies are probably good in PowerPoint presenting, but not in actually making a better chips for the company itself, because you always hear a lot of problems in their Intel chips and the Samsung chips itself. I would say that probably Warren Buffett read TSMC company wrong. I still have a very constructive view on TSMC itself. I think they are the market leader and they continue to be a market leader. And now being 10 or 20% off the all-time high, I would think that, yeah, this is one of the better opportunities itself if you are holding it for a longer term. Okay, beside Nvidia, what about the AI related software company that worth your radar? Okay, maybe let me take a look at it and then I will answer it offline. Yeah, I don't have an answer for now. Let me answer it in the YouTube comment sections. Okay, and yeah, that's it. Thank you all for coming. I wish you all have a great night. Thank you.